What is up, guys? We are live. We're going to be preparing for the London session today, as usual. I'm sending a message to my community on Telegram. Make sure you're on the Telegram, guys. If you're watching this live, make sure you join the free Telegram because I drop so much value over there, alright? So, let me actually see. I want to see the new thumbnail. W in the chat if you rate the new thumbnail. Bro, this looks awesome in my opinion. Yeah, this stream, how can I hide this stream? Yeah, manage videos. There was like a 3-second stream yesterday. I was planning to stream, but I got a bit busy and I couldn't basically go live. Right, live now on YouTube. Tune in to make cash. Alright, let me actually post it on my X as well. Because why not? Why not share the sauce? I don't like to hide the sauce. I like to share the sauce because people deserve it. The community deserves it. And especially everybody's been, it's been supporting me every day, watching my videos, watching what I do. You guys deserve the best, so I'll give you the best sauce in the game. Always. Like always. Literally. Alright, so as you may know, I'm linking up with a prop firm, basically a company. And what they're going to be doing is, alright, let me actually go to gold. Yeah, so the prop firm is basically a new prop firm and they have crazy good prices. Yeah, basically I'm in this long right now. I think the price hit my take profit area. Let me see. Yeah, I think we did hit my take profit because I was eyeing this level and now we're having this crazy rejection at this level. Yeah, that's like a small scalp trade I was taking, and I was looking to evolve this into something bigger, right? So this was the initial idea, and that's like the initial stop loss, right? It was basically over here. Yeah, about 1.5 to 1 risk to reward. But yeah, the reason why I took this trade is because I knew I could move my stop once the trade basically moved in my favor, because that's a high probability trade. That's the reason why I took it. And yeah, basically now with the stop loss being over here, that's a 3 to 1, right? I might just close the trade over here because I think we did hit the take profit actually. Yeah, I think we did. Let me actually just close the trade. Just a few pips in profit, nothing too crazy. This might actually be something that could turn into, it could turn into a bigger trade. But the reason why I want to exit this trade is because I have some levels marked down here that need to be tapped, and I'm not sure if we're going to touch them today. So like this level over here, because that was the initial idea. But then the market wicked down. Let me actually show you. Yeah, I think we're in for another wick. That could be the case. Just another wick to finish off this take profit, the final TP. So yeah, let me actually break this trade down. It's a very simple trade, nothing too crazy. Yeah, basically I was expecting, once the price breaks out of this zone, I'm expecting let me actually zoom out just to show you the bigger image, alright? So this is the bigger image, alright? I don't know if these annoy you. I can see the chart totally fine with these. My eyes are used to them. So yeah, this was the idea. I wanted to short towards this area, right? And I'm showing you, this is the sauce over here. This is like the real fucking deal. This is the realest deal ever. like nobody's gonna show you this because these are institutional concepts and nobody shares this information. So make sure to actually use this information and apply it to your trading. Alright, so I was looking for a closer below this level. But as you can see, the price did not close below it. We had a rejection. But on the lower time frame, this looked like basically a candle closed, this candle over here, the bearish engulfing. And basically what happened is once the candle closed, a lot of sellers were coming in because the candle closed below this level. And it was closed below this level intentionally, right? This did not happen by chance. This happened purely intentionally, right? And the reason it happens is to bait all the retail traders to go short over here. And where's their stop going to be? Most of their stops are going to be here. As you can see, this is the first wick. And over here. And about here. This is why I'm saying, like, basically, the price could just push all the way towards here. This was the initial idea for the long, is to go long over here, just to liquidate all the shorts. And yeah, basically that is the idea, right? And there's a lot that goes deeper into it. I can go deeper into the trade and break it down and see exactly, I can show you exactly why we took this trade. But yeah, basically it's a lot of explanation. You're probably not gonna understand what I'm even talking about, because yeah, let me actually just close the trade over here. You know what, I'm just gonna go degen with this and hold my position, because this is a nice area over here and there's no reason for me to close this trade unless price breaks this level over here, right? As long as the price holding this level, I don't need to close my entry. I don't need to. I can even have this level over here as my final, let's say, yeah, the final basically obstacle towards my entry, because my entry was over here, right? So this is the final obstacle towards my entry. So the price could wick towards this area and then go towards this area. But preferably what I want to see is this level holding, seeing a couple more candles, 1, 2, 3, like we're seeing right now, and a push towards this area again. So as long as we have this nice confluence over here, it's also a key level, as you can see. Let me actually move it. So this is a key level. This is a very low time frame. So yeah, this is a key level on a lower time frame. It's a psychological level on the higher time frame. And it's a 61.8 with the red MA, which is the 50 MA, and it's probably, yeah, it's a 78.6 on this fib. And as you can see, the 27.2 aligns with the 127.2. So I do think that the price is going to reach our take profit soon. So for now, we're holding the trade. You can set, if you want to be extra careful, just set your stop loss over here. But then you're risking like getting liquidated like this. So what I would do is just set my stop loss at break even, basically over here, and just in case price decides to reverse and continue falling down, we're protected and we exit the trade over here, right? So this is what I'm gonna do right now. I'm just gonna set my stop loss to break even and protect my position. All right, 272.627. Wait up, my phone is glitching right now. Yeah, so all right, do you want me guys to go over Bitcoin? 2726.35. All right, we're protected right now. The only thing that can make this into a small loss is a crazy volume coming in and kicking, basically kicking us from the short with a big yeah, with a big what's it called? Yeah, with a big oh my god, I can't actually forgot the term. Yeah, slippage. Yeah, slippage. Fucking slippage, bro. Still, I just woke up, guys, so don't, like, excuse me. Sipping on my coffee still. I'm feeling a bit sick, so yeah, excuse that. But yeah, as you can see right now, it's just doing what it's supposed to be doing. It's holding the level, and what I want to see is price breaking this this area over here. Once you break this area over here, I think the price is just gonna shoot higher and quickly. We're gonna see, yeah, in the next 10 minutes probably, just in the next 10 minutes. Should I extend my take profit? Is this something I should be considering? Let's see. Let's see. It could be something that is worth considering in this situation. Alright, so in this situation over here, I'm not gonna extend my take profit, to be honest, because yeah, it aligns perfectly with the 61.8 on this retracement leg. So we're probably gonna, like, you can even enter a short over here, but I'm not gonna do that just for the sake of it, because this could be they could just push it higher, probably towards here, and probably all the way up. Gold's been acting up lately, so I don't wanna. Like, this short could actually be something, because it's also a psychological level, and there's also nice confluence over here. It's not a bad short. I wouldn't say, I'd definitely say that it is not a bad short to be in. Let me actually see if it aligns with this level. Does it align with this fib? Yeah, somewhat. Yeah, now it makes sense. Yeah, so it's either this level or this level that's worth taking. But right now, like, because we had this retracement, everybody's gonna try to short this move to the upside. And yeah, I still think we should see the price drop to this level because there's so much liquidity over here. The buy side liquidity over here. So that's gonna be interesting to see. And this level, as you can see, like, we broke higher and we never came back to this level, and it aligns perfectly with all these confluences. So I think we should see some kind of reaction on this level. However, we could just react higher, like 100 pips, 50 pips, 80 pips, whatever, and then continue the downtrend. It's not supposed to not like in a I don't think it should, like, reverse from here completely and just shoot to all-time highs, but it could happen if the fundamentals and everything aligns. It could be the bottom of this downtrend, basically, and it could be the trigger for the move towards these levels over here, right? Always keep all the options on the table. Don't remove the options from the table when they're valid. Until they're invalidated, you can ignore them. But as long as they're valid, you should definitely take them seriously. Alright, so as you can see, a rejection from this level I marked over here. Perfect rejection. Now what I want to see is a bounce from this area over here, right? 161.8 with a 50 MA. I'm on the 1 minute, so it's not significant. It's probably going to be something around here. Yeah, as I said, it's not a significant level because it's on the 1 minute. As you know, I always preach this, the 1 minute is just noise, alright? It's just pure noise. You don't want to be trading the 1 minute. It's just too small of a time frame. Unless you're doing, like, your breakdown on the 30 minute, let's say you're from the 1 hour, you drop to 30 minutes to the 15 minute, and then you execute on the 5 minute and the 1 minute. Then that would make sense to look at the 1 minute, but yeah, in this case, like, I'll just look at the 5 minute, honestly, because that's all I need. I need a 5 minute closure. either below this level or above this level over here, right? This is what I'm looking at. This is what I'm waiting for. The London session is about to open in about 5 minutes, so we should see some volume kicking in, and yeah, it's going to be an interesting one to see whether the price is gonna. Yeah, I mean, after this rejection over here, if you want to just close the trade straight up, like just close it over here, it's fine. I'm not gonna blame you for it. I wouldn't say it's a bad move. It is definitely not a bad move because we did have rejection from this level, and it's a 127 level, and it's a 161.8 level. So both levels got rejected perfectly. So it could be the beginning. Like, the probabilities have changed right now because of this rejection, this one, and these two rejections over here. So the probabilities are now probably like 50-50 or even 40-60 for the price to go back down. So if you want to fully close the position over here, that's totally fine. It's totally fine. Or if you want to move your stop loss, let's say just above this level, right? So you either see a push on a momentum or you don't want to be in this trade. You could do that as well. So it all depends on your risk management strategy, in my opinion. To me, I think I should look on the bigger time frame and decide. Alright, so on the bigger time frame, we're still looking bullish. Besides this rejection, everything is looking good. On the 1 hour, it's looking bad, to be honest. It's not looking good. But we will have the hourly close in 3 minutes, so it's going to be interesting to see whether we close above or below this 38.2 level over here. If we close above, let's say over here, that's a good sign. If we close below, we can just exit the trade. So I think this is like the final decision maker. But our stop loss is at break even already, so there's nothing to worry about in terms of risk because we're risk free pretty much at the moment. We just have to wait for the London session to start and see how this candle closes on the beginning of the London session. So if it closes above this level, in my opinion, this is an easy push to the upside. There should be another push, at least towards this area. That is the least I can expect. Yes, it may look a bit weird to you if you're new to trading, but this is a counter trend play because on the hourly we're basically moving down, right? As you can see, it looks like a beginning of a downtrend. Basically, this is what it's looking like. But we did not close below here. This is what I'm saying. This is why I went long over here, because we did not have a full close below this level over here, right? This whole entire thing. So yeah, it could be a reversal to the upside, but I'm not gonna play that game. I'm just gonna take my profit over here for a nice 3-to-1 risk reward ratio. In my opinion, that's a beautiful setup, and it's a good way to trade on a Friday morning, right? This is a Friday morning. We've already done the biggest chunk of our trading through the week, right? We've already done that. We basically already done that biggest chunk of trading through the week. So now we're just taking some appetizers, some profits for the next week, so we can reinvest those profits and basically start the week. If I want to trade on a Monday, for example, I have 40 pips of profit, so I don't mind risking money on a Monday. So there could be a nice opportunity on a Monday, and it could lead to even more profits. So basically, now make plus 40 pips, right? So let's say I make 40 pips. I reinvest that on a Monday, which I don't want to do that if I don't have the 40 pips, right? If I don't have the 40 pips, I'm not going to be risking 40 pips on a Monday. It just doesn't make sense because it makes sense to risk the 40 pips on a Tuesday when there's a lot more volume and there's a lot more going on. I can catch bigger moves, right? So if I'm up 40 pips on a Friday on a scalp on a shorter time frame trade, I can invest it on a Monday and make, let's say, another 80 to, let's say, 160 pips, right? So 2 to 4 R on those trades, right? Then when I'm trading on a Tuesday, on a Thursday, on a Wednesday, I have 200 pips. I got basically 200. I got about 200 to, let's say 100 to 200 pips of profit, all right? That's realistic. 100 to 200 pips of profit that I can use to trade on Thursday, Wednesday, Tuesday when there's high volume. So I can be risking 40, let's say, to 50 pips per trade, and I'm good. Even if I lose 1, 2, 3 trades, I'm still profitable. So I'm trading from a carefree state, right? I don't care about losing the trade, and that's what's probably gonna make me win the trade because I'm not rushing positions. I'm not in a rush to make 50 pips because I'm up on a Monday, right? I'm not rushing anything that week. I'm up on a Friday and a Monday, right? So there's nothing I need to like. There's no FOMO kicking in. I'm not chasing a move, right? I'm gonna be waiting for my setups, holding a nice chunk of risk, like 40 to 50 pips stop loss. Most likely not gonna get stopped out by a 20 pip stop loss, say over here. If I had like a 20 pip stop loss, I would just get liquidated, right? Um, so I'm gonna be holding big, nice stop losses with, yeah, trading from a carefree state of mind and just waiting for the perfect setup, which will probably lead to more profits, right? I can just hold the Monday profits, get 100 to 200 pips during that entire week, right? I'm up to 100, 200 pips from a Friday to Monday. That's like 4 days, um, which are like 2 business days in trading. So I'm up 100 to 200 pips in 2 business days. I don't need to trade for an entire week. I can wait for next week and wait for the perfect setup, and then like hit like a nice 5 to 8 to even 10, even 15 R, even 20 R sometimes. But I can wait for these big positions and scale them because I have loads of profits that I can use on the best probability setups, right? This is how you want to trade, guys. You don't want to be chasing rabbits all the time. You want to hunt the big elephant, right? Alright, guys, like you can see, we've rejected multiple times from the level we're breaking down. This level should hold. We're basically consolidating right now in this 1 minute. Let me show you. This is a 1 minute consolidation. Basically, this box. So if price breaks below above this box, we're heading to our TP. If price breaks below this box, we're heading to probably to our entry and probably even lower, right? So this box needs to hold. If it breaks below this box, I'm just gonna close the position, cut my profits over here. I'm gonna be up about 1 R at this point, at this stage. Yeah, about 10 pips. It's not much, but it's better than nothing. And if we do hit the take profit, it's going to be a nice 43 pips. So as you can see, we hit the bottom of the range. We're going back to the middle of the range, and possibly breaking out of this thing over here, right? As you can see, let me actually show you. Yeah, so a lot of people are going to be trying to short this move, and they probably have their stops over here, right? But this is a range. You don't want to do that in a range. You don't want to short a range. You just want to wait for a breakout, a confirmed breakout of the range. And this includes many things. It can include volume, it can include multiple fib levels, it can include 5 to 6 confirmations coming in together, and that could be the confirmation for your breakout. But as long as it's in the range, like you don't want to, maybe you want to trade the range if you had a good range trading strategy. Maybe you can trade it, so from here to here to here, just range strategy. But I don't do that. I don't use it unless it's a big range that, let's say it's a daily range, and I have, let's say it's a daily range, and I have loads of pips, to the upside and loads of pips to the downside. Then I can dissect that range on the hourly chart, for example, and dive into the range. I'm gonna actually see the hourly candle, how it closed. Yeah, so as you can see, the hourly candle closed above the level, which is good. Uh, Price wick down, came into the level, wick down, and it's rejecting right now, so that's a good sign. Let's see if we can turn this into a green, basically a bullish move on this candle. So it's gonna be interesting to see. But yeah, at this stage, if you wanna, yeah, they're coming back to hunt the stop. Yeah, at this stage, if you want to just close the trade, you can close it, to be honest. Like, it's consolidating, it's not doing anything. You can just close the trade over here for a nice 20 pip profit. Yeah, it's about 20 pips. It's not a bad trade if you close it here, because it's just consolidating, just testing our patience. And it's most likely just gonna liquidate both sides, in my opinion. And on the 5 minute, if you look on the 5 minute, now just notice this. On the 5 minute, if you look closely, like this wick just came above this level, and it's now falling back down. So it could be, as I said, like it could be. Yeah, I just closed the trade. It could be the, yeah, over here, as I said, like the 161, like our initial idea could be right, because yeah, you can see like double wick above this level, so many wicks on this level, price is breaking down. Yeah, it could be just the end of this trade, and that would be the final take profit, and that's it. So yeah, we just closed the trade, about 10 pips profit, nothing major for today. But it's a nice trade to have. I think that should have been my final take profit instead of this one. This one was a bit exaggerated, I guess. But again, this could not even, like, this could be just another wick down, and it could shoot up eventually. But I'm not gonna, yeah, I'm not just gonna hold it just because. I think if price, like this move, since this move happened, we're more likely to just continue falling down. As I said, the probabilities have changed once we had these double rejection and all of these rejections from here. The probability changed. It simply changed. You have to accept it and you have to take action. Just close the trade. So we followed our plan to the T. As you can see, price is rejecting from here. As I said, it could do something like this. But this is how you manage your trade. You want to manage your trade properly, and you gotta accept the result and just don't get tilted by it. All right, don't make it. Even if the trade runs to my full TP at 43 pips, I'm good with it. I just followed my plan, and I followed my analysis, and that's what matters to me. Because if I keep doing that, I know for a fact, for 100% fact, that eventually I'm gonna make money. I'll be profitable. But let's say I got greedy on this trade. I did not follow my analysis. I did not follow my plan. I did not close the trade. And it did end up hitting my TP. And I kept doing that. I kept breaking my analysis, breaking my trading plan, breaking my rules, eventually I'll be losing money because I'm gonna break. It's a habit, right? So basically, I'll end up breaking my trading plan and probably risking more than I wanted to, doing something that I did not intend on doing, which will ruin my trading for me. So this is the reason why I have to stick to my analysis and make decisions properly, right? I think I've made the right decision regardless of the outcome because it's a chop. Like it's a chop. We have this rejection, we have this chop, we had this breakout, and yeah, just follow the plan. I just followed my analysis basically. This is from my expertise. And if I keep doing that, if I actually stick to my plan, stick to what I know for 100% fact that I will be profitable. I will always remain profitable if I keep doing that. If I keep doing my trading plan, even if you have the best trading plan, even if somebody has the best trading plan ever, but they keep breaking it, what's the point? Eventually, they're gonna be losing money because at some point, let's say on this trade, I risk 50% of my account on this position, and it ends up like going down, right? Even if I had the best strategy, but just because I broke my plan once, I'm gonna be losing money in the market if I do that just once. So this is the importance of positive, good habits and consistency in the market. As you can see, now the price is reversing, and I would have just got kicked at break even instead of getting out with some profits, right? I could have got out here, right? Could be my analysis was a bit wrong, but that's why I review the trades. So I do the journaling, right? Because maybe something was off, maybe I wasn't, maybe there's something that I did not notice when I first set my TP, and maybe there's something that I could have fixed, right? And maybe there was nothing I could do. Maybe my analysis was correct and I stick to my plan, and the market did what the market did. And it's my job to know what happened and to know if there's anything that I've could done better the next time, which I'm 100% sure that there is. And if you do the same, if you do the same, I'm pretty sure like everybody has something they can fix. Even the person who's been trading for 20 years, I'm 100% sure that they can always get better. They can always, I can guarantee they can always find something to improve about their trades. Something, just a little detail. Maybe it's the perfect trade and it's the perfect entry. They entered the bottom. Let's say they entered at the exact bottom and they got out at the exact top, right? And they held all the way through. And they had the tiniest stop loss they had. Let's say they had this perfect 10 pip stop loss, and the price hit their TP and they had this 5 hour trade, right? They could have scaled their entry over here, right? They could have scaled their entry. They could have basically entered over here with 2 positions instead of 1, because their stop is a bit small, right? Because their stop, let's say they usually risk 20 pips, and now this trade is 10 pips, and they enter it, let's say they always enter with 2 lots, and they entered here with 2 lots, right? Because they have 10 pips, maybe they should have entered with 4 lots instead. So maybe they can find a way to identify these setups where they risk only 10 pips, and their lot size is going to double on these type of setups because they're high probability and they have half of the stop loss that they usually use. So they want to find a way to increase their lot size, right? On these setups, to identify them, know what's always in common with these setups, and double down on them, right? So there's always, my point is, there's always something to do. You can see the perfect rejection from this level. 161, 200, 38.2 with a 27, 25.5 psychological level. For, and I'm sure there's probably a fib level over here as well. Yeah. As you can see, all is almost in confluence with 78.6, which if we adjust our fib a little bit, let me actually delete this. I'm gonna actually delete this for you. Object tree. Yeah, so I'm pretty sure if you adjust your fib, there you go. You got 5 confluences on this zone, so this could be a really good entry over here, right? If our idea for the price, maybe now the price is going to shoot to our GP, right? So as I said, there's always something to improve. You're always going to remain a student in this game. You're never going to become the master. The sooner you accept that, the sooner you start making progress. That you don't know anything and you're a student and you should do your best every single day to learn and improve and actually make progress, right? This is how you make progress. You study the trade, you see your mistakes, you look for ways to improve. You look for, like, the next time I'm trading, I will look for this and this and this. You go out and test it in real time. You test it, you back test it, you gather the data. Yeah, you just gotta do the work, you know? You gotta put in the reps. It's like everything, you know? It's like when you're training at the gym. If you're not tracking your records, if you don't know what your bench press max record is, how are you gonna know, like, if you're making progress? I know that, like, when I was training, at some point, I was benching 105 kilos for, let's say, 3 reps, right? I knew that was my PR. I knew if I bench 105 kilos for 4 reps, I know for 100% fact that I am making progress because there is one more rep that increased. Like, I did one more rep than the last time. That's 100% fact that I did make progress. So you want to track your shit, you know? You want to track your things. You want to track you basically want to track everything. Tracking is goated, is legendary. Even when you're speaking, if you want to harness your speech, what you want to do is record yourself and actually speak and become just review your speech, the way you're speaking, and notice any mistakes that you're doing and try to fix it and come up with ways and test them, you know? This is like the lab work, the lab studies. It's like, even with rappers, even with musicians, like, everybody does this. Even with football players, you know, they watch their game over and over and over again, and they look for mistakes. Like, we're getting paid over here based on performance, based on quality. You're not like, yeah, I think any person who's good at his craft, they always review their actions. Even a businessman, like, I just closed a deal with a client for $1,000. How could I close the deal, the same deal, making more money from the same deal? Maybe I should have said something differently. Maybe I should have offered him something that I didn't. Maybe I should have added a bundle, right? Maybe I should have bundled 3 more things with it. There's always something to improve. That's the point. This is the rant. This is what I'm ranting on. There's always something to improve. And you gotta accept the work. You gotta accept the fact that there is always something you can do, right? Don't be lazy. Don't be the type of guy, like, who takes the trade and just fucks off and never reviews the trade and never sees what happens and what could have he done better next time. So for me, like, if I was long over here, I should have waited, maybe, let's say, for my stop loss. Maybe I shouldn't have set my stop loss to break even because I had this confluence over here. Maybe I should have taken my fib and noticed that the 78.6 comes perfectly over here, and yeah, basically I shouldn't basically set my stop loss at break even because I have this level, and I could just set my stop loss just below this level, right? These are the tiny details. Like, and now I'd be still in the position, and it could run to my full TP, to my initial idea that I had, you know. So there's. I'm not saying that this is true because the price could just run down from here, but I'm saying I have, like, this is my job to review it and see if there's anything I can find that I can implement, if there's anything I can test, and basically after testing it, getting the results, see if there's anything I can implement into my systems, if that makes sense. If I do this over so many different scenarios and see and notice that every time this happens, this thing happens, or 70% of the times this happens, if I keep doing this, I'll have a positive EV. I have a positive, basically I'll be profitable doing this. I'll be 5% more profitable, 2% more profitable. Yeah, basically my win rate would increase by 1%. It's still worth it to me because 1% over 100 trades, even if it's like a 5R win, if it's a 3R win, 1% more, so that's an extra win. That's an extra, if you're risking 10 grand on a trade, that's an extra 20 to 30 grand over 100 trades, right? 1% is a lot. 1% win rate is a big difference. Don't underestimate it. Imagine what you can do if you can improve your win rate by 5%. That's an extra 50 grand. That's an extra 100 grand to your net profit. Imagine what you can do if you increase your average win rate, of your average risk to reward to 5 instead of 4. That's an extra 1R. That's an extra 1 risk. So if you're risking at 1.5%, that's an extra 1.5% profit. So if you're trading a 100K account, that's an extra 1.5K profit. So these little details matter a lot, right? Optimizing the trade, knowing how to scale, knowing when to scale, knowing when not to scale. And it's all going to be based on probabilities. It's not going to be 100%. It's not like when this happens, I should always scale and it will always win, right? So you can play around with these systems and test them and gain experience as well in different conditions, in different situations, in different market environments, and in different psychological overall market sentiment, if that makes sense. In my opinion, is crucial to do these things because they could make or break your trading. It's like e-commerce. If you've done e-commerce before, I like to give these analogies because I know, like, I was in e-commerce, so if somebody explained that to me in e-com terms, that would make sense to me. So let me give you an example. So if you're doing e-com, right? If you're doing e-com and let's say you have a store, right? You have 1,000 visitors a day, 1,000 people coming into your store every single day, right? You have 1,000 visitors, and you're converting at this moment 1% of the visitors, which means you have 10 customers shopping from you every day. So let's say their AOV, which is the average order value, right? AOV. That's an ugly O, bro. Yeah. So the average AOV is 50, right? So that's 10 times 50. That's 100. That's $500 a day, right, in revenue. Right. Let's say your cost of the product, the cost of advertising and the products that you have to ship out, the 10 products and the advertising to get 100 visitors a day combined together, and like the subscription and the fees and everything combined together, let's say it's $500 a day, right? So you're break even at this point, right? But if you increase your conversion rate to 2%, basically to 2%, right? That would make a massive difference to your business because now you're profitable. Assuming that you have the same 1,000 visitors, now you got 20 orders coming in, right? And you got $1,000 in sales because the AOV is $50, which means the average order value is $50, right? Now you got 1K a day, right? Let's say the cost of the cost of the products for 20 products. Let's say the cost. Let's say you're still paying $500. Oh yeah, let's say you're still paying the same for you basically got the same visitors, and you're shipping 10 more products a day, right? Let's say that's an extra. Let's say each product costs, I don't know, let's say $20, right, for you to buy. So that's an extra $200 for your cost, your total cost. So this is gonna go here, right, and basically it's gonna become, the new cost is $700, right? But now you're making 1K a day, so that $700 of cost is profitable because you're spending $700 and you're making $1,000 a day, so you're making $300 in profit per day, right? Instead of breaking even, just making nothing, just working for free, now you're making $300. So imagine if you increase your conversion rate to 3%, now you got 30 customers, and 4%, now you got 40 customers. So this whole analogy just goes to show that once you optimize the system, it could make or break your business because it really does matter. It does matter. Like, these little details do matter. If you have, let's say, a 50% win rate, with 2-to-1 R, right? 2-to-1 risk to reward. Let's apply this same analogy to trading. Let's say your system has 50% win rate, right? You're winning 50% of the times, and each time you win, you're making 2R. So if you're risking $1,000, you're making 2,000 every time you win, and every time you lose, you're losing 1,000, right? At this stage, let's say over 100 trades, right? 50% of the time is 50 trades. So 50 trades times 2, 50 times 2, that's 100, right? So that's 100 grand, let's say, assuming that you're risking 1,000, per trade. So that's 100K, right? 100K profit out of the 100 trades, and you have 50K losses, right? So your overall P&L should be it should be 50 grand, right? So because you have 2R, 50% win rate, and you're applying the system on 1,000 risk per trade, you're making 50 grand per 100 trades. So assuming that you have 50% win rate, assuming that you need, let's say, 50 grand a year to live. Let's say you pay rent, you do all these things. Let's say you pay rent and you have a car, you're paying insurance and all these things, you're paying taxes and all this thing. So assuming that you need 50K to live off per year, right? So 50K in, 50K out. So you're pretty much just set. You're pretty much just breaking even on life, not in business, but in life in general. You're break even. You're not improving. You're not making more money than you're spending. So increasing, let's say your win rate by 5%. That's an extra. Five winning trades out of the 100. So that's an extra 10 grand because every trade you win is a 2R. So 5 times 2 is 10, right? 5 times 2 is 10. Is 10, right? So now you got an extra 10 grand to your yearly. Let's say it takes you a year to take the 100 trades. So you got an extra 10 grand to your yearly income, right? Imagine what you can do with an extra 10 grand. That is the power of optimizing, right? So now, because you optimized, you've did your job correctly. You've tested your system. You've tested your strategy over and over and over again. Now you got an extra 5% profit, right? A 5% win rate. And imagine if you optimize your risk to reward. Now you're making 3 times instead of 2, right? Let's say you've optimized your system and you found a way to win 3R instead of 2. So now you're making 3 grand, right? That's when things get serious. Let's say you're making 3 grand now per trade, right? So now this whole equation changes because out of the 100 trades, you're winning 55 trades. So 55 times 3, right? That's 50 times 3 grand, right? So it's 150, that's 165k, 165k instead of 100, right? Because over here, your system was not optimized. Over here, you're optimized. You're fully locked in. Not even fully, you're just optimized a little bit more, right? Now you got an extra 65k a year to live, to spend. That's life changing. This is what I'm saying. You are your business eventually. So optimizing your business does work. It does matter a lot. And imagine what you can do if you're super optimized. Once you figured out a system, a profitable system, you want to be super optimized because imagine what you can do with a 70% win rate instead of 50 and a 4R average, right? So you're winning 70% of the times with 4R on average. So taking that calculation, applying that same concept on the 100 trades, now you're winning 70 trades, right? You're winning 70 trades out of the 100, and assuming that you're risking the same thing, 1k, now you're making 4 grand per trade, right? That is the shittiest K I've seen. Yeah, so you're making 70 times 4k. Now the whole equation is different. Now you're making 280 instead of 100k. Now you got an extra 180,000 per year, because we're assuming that it takes you a whole year to execute 100 trades. Now you got a whole 180k per year. That's a Lamborghini. That's a new Lamborghini every single year. Extra. Just because you put in a little bit of effort, a little bit of work to increase your win rate, and now you're balling. You see, does that make sense? I hope it makes sense for you guys because it does for me. It does make a lot of sense because now you've optimized your system. And imagine what you can do if you keep optimizing that and you keep building on top of it. Like each 1% is going to make a massive difference because you're not going to be risking 1k at this point because your income has increased, right? Your wins are so big that you can up your risk to 2k and to 5k, and hopefully you can scale that thing up to eventually risking 10 and 20 and 30,000 per trade. And imagine if you can do that with a big with being like super optimized. This is the final stage you want to get to. Let's say you have an 80% win rate, which is, I know it sounds crazy, but you can have 80% win rate. Let's say you have an 80% win rate with an average R of 5, right? 5R. 80% win rate with 5R. and let's say it takes you the same amount of time, 100 trades per year. Just giving you examples, guys. 100 trades per year, and yeah, basically you're winning 80%, 80 trades times 5K. Yeah, let's say now your risk is bigger because now you're making money. Let's say you're 2 or 3 years into the business. Let's say you're risking 5K per trade. 5 grand, so 80 times 5. That's basically 80 times. Yeah, you're risking 5K per trade on a 5R, so that's 25K profit per winner, right? Per winner, basically. Over here, we do not calculate the losses over here. That's 180K, and the losses are basically 30 times 1K, that's like 150K, right? So that's like 150 instead of this. So basically 80K times 25, basically, how much is that? I don't know. It's like crazy numbers. That's like 160, that's like 2 million, right? 2 M's. Now you're making 2 M's a year because you're balling. Now you're balling because you put in the work. You've optimized the system. You've super optimized the system. Now it's working efficient. You're taking 100 trades per year. You're not over leveraging. You're taking very few trades. Like imagine how much time it takes to take 100 trades per year. It's not much. There's 250 trading days per year. So even if you do that on 2 years, right? That's 2 M's still. Like you can make 1 mil a year. That's loads of money. That's great money because all you're doing is just clicking buttons. You're just trading. You're not like, yeah, it's just a mil. It's just a mil a year. And of course, you're not limited by the mil. You can scale this thing up. You can keep doing this and scale your positions up and risk 10K per position and 20K and go up and up and up. My mentor risks 495 lots, which is $49,500 per 10 pips. Per 10 pips. So if he's risking 50 pips on a trade, that's 250 grand, right? So imagine if he hits, like, I know what he hits. He hits like 1, 2, 3 mil a day. That's the final stage you want to get to. That is like the big boss of trading, like hitting that 7-figure days. This is how you do it. You just gotta keep building on top of your system and keep improving it and keep backtesting it and keep upgrading it and keep increasing the quality of your trades and increasing the quality of your take profit placement, increasing the quality of your stop loss placement and the timing of your trades and like everything literally you can tweak everything. You can tweak the so how do you optimize? How do you actually optimize? How do you optimize your system, right? What can you change, right? So here's how to, let me actually write this down. How to optimize your system. So what you can tweak is either indicators. You can play around with the indicators, see what indicators you use. Maybe for the same entry you're using a VWAP. Maybe you want to try the same entry with a 50 MA, with a 100 MA, with a 200 MA, with 2 MAs coming in, right? You can optimize your system with indicators. You can, like, let's say MA, volume, VWAP, Bollinger Bands. I don't know what you guys use, like all these different indicators, right? You can optimize your system by choosing time frames, right? Picking different times to trade. So you can optimize your system by picking, let's say you're trading the London session open. Maybe you want to trade the London session second hour instead of the open. Maybe you want to trade the New York Open instead of the London Open. Maybe you want to wake up a bit earlier and test out the Asian session, right? So you can pick different times to trade. You can base your trades off of different times. Maybe you can add in economic events. So maybe now you've introduced some type of a trade that you can take on an economic event, which will increase your overall win rate and your average R by 2%, 3%, right? We're talking about these micro changes. It's 1,000 small details that end up adding up, right? This is business. This is how you do business. Maybe you wanna add fibs, right? Tools, basically try different tools, right? Maybe you want to add in a fib level to your entry. Maybe you want to add in a trend line or a daily key level or a weekly key level to your entries. So this is how you build systems and optimize them. Basically, you want to pick. This is more about optimizing systems, not like building systems. This is if you already have a system and you want to optimize it, you want to make it better. If you don't have a system, just join my free Telegram and text me, and I hope you come up with a system. Yeah, basically, indicators, picking different times to trade, economic events, trying different tools, trying different instruments. So if you're trading gold with this strategy, maybe you want to test the same strategy on Bitcoin. Maybe it does better on Bitcoin. Who knows? You gotta test these things. You gotta test these different assets and see where your strategy performs best. It's like you're a scientist at this point. You gotta test things out and collect data and see what works, what doesn't, so you can keep applying what works, right? So this is a reason why people go to mentors, because they've already done the heavy lifting. They've already done this. They know what works. They know what doesn't. They've already tested things out. Does that make sense? They already done these things, right? So you want to try, maybe your trades have 4 confirmations. Maybe your trades have 4 confirmations. Maybe you want to try trading with only 5 confirmations instead, right? Maybe usually place your different test different TP placements. Maybe that could increase your average risk to reward ratio. Maybe you want to test out different stop loss placements, right? Maybe instead of losing, maybe you've always set a tight stop of 10 pips. Maybe you start testing out 20 pips stop loss, and it increases your win rate, right? These are all valid things you guys are not doing. If you're not doing that, you're missing out on money. This is why you're not profitable. It's not the things that it's not the things that these guys talk about online. This is not business. This is business. It's like having systems and optimizing them. With psychology, of course your psychology is shit because you don't have a system. You don't know what you're doing. If I was running ads, if I had like this ad set, and I just ran an image ad, and I didn't know what the fuck was I doing, I might just lose all my money on this ad set just trying to get sales because I don't know what I'm doing. I'm gonna just cut the ad set as well. I'm gonna just kill the ad set, and it could be a great ad set. It could be a massive winner, and I could just cut it because I'm afraid of spending $20 on that ad set and not getting a sale when I already have 5 add to carts and I already have 2 checkouts initiated, but it's because I don't know what to look for on the ad set and I don't have systems in place. I might just kill the ad set too early and just miss out on big profit and just spend $5 for nothing. Not even just for nothing, but I wasted $5 that could make me so much more money, and I just ended up losing $5 instead of making money. It's kind of the same with trading. It is the same. So yeah, test out different placements, different time zones. Maybe test out different desks. Maybe test out different desks because maybe on this desk you perform slightly better. maybe you execute your system slightly better on this place, right? Maybe your desk is a bit in a very noisy area and you always get distracted. Maybe you want to remove distractions from your desk. Maybe that is gonna help you just be a little bit more focused and it adds up. You see what I'm talking about? Maybe you want to add some rules next to your desk. Maybe you want to add some checklists, right? But yeah, I'm over here. I'm just purely talking about the system itself, not the things that help you execute the system, right? So the things that help you execute the system are different. It's yeah, it's basically your mindset, how you see the market, how you view the market, how you think in probabilities, and understand that you have a system that you must execute on, and it's a profitable system that you've tested over and over and over again, and you have to execute it perfectly so you don't get shitty results that you've never intended to have, and all these things, right? It's a whole different game. But I'm talking about purely just the system itself. These are the main things you want to test out, in my opinion. Um, Maybe there are more things. I'm not sure. Yeah, just indicators, confirmations. By confirmation, I mean trend lines, key levels, and all these things. Maybe you want to test out different time frames. Test different time frames. So if you're trading, let's say if you're doing this strategy on the 1 minute and you have 50% win rate, maybe you want to do it on the 1 hour. Now all of a sudden, everything makes sense, and your levels are being more respected. Your fibs, your MAs are being more respected because they're on the 1 hour, and now you go from losing money to making money, right? Is these little things, right? Just out different time frames, placements, economic events, bears. What else is there to change? Yeah. I think that's pretty much it. That's pretty much everything you can test out. Yeah, you can test out different um, trading styles, right? So, um, yeah, for example, if you're trading, um, yeah, if you're a breakout trader, maybe you want to test out, maybe you want to try range trading, right? Maybe that makes a change for you. Who knows? Like you gotta test these things out, right? But yeah, once you have a positive EV, basically a positive, the positive EV means basically that you're profitable, right? Once you have a profitable system that you've tested, you collect the data, and you see that based on the data you are profitable. In my opinion, this is your next step. You have to start optimizing. Um, of course, with that, like knowing that you're already psychologically ready to execute on the system, that's when you start optimizing your system. But first, you want to prepare yourself psychologically. You got to be willing to take losses. You got to be willing to think in probabilities. You got to be willing to put in the mental work and building the mental frame for business and for trading. Once you have that right, once you know how to take a loss, you know how to handle drawdown, you know how to handle pullbacks and all these things. Like basically trading with $1 and just understanding the nature of the market and like pullbacks and manipulation and all these things, and maybe you can get wicked out, maybe you miss on your entry. Like over here, let me show you. This is our trade, right? This is what I was looking at. Now that the trade is running, it's running towards my TP. I had my entry, I think over here, and my stop was about over here, I guess, over here when I first started with this trade. And now we're in profit. Do you think I'm just gonna like be tilted and just try to short this thing here? No, like I'm used to it. I'm already used to it. I'm numb to that emotion, right? You gotta build the build the foundation first before starting to optimize and before sizing up, right? When sizing up, in my opinion, comes last. Like sizing up literally comes last because you want to size up once you have your system optimized. and ready to go, right? This is where you want to start sizing up, not when you're just total beginner, right? You don't want to do that. You're literally, yeah. There's no point in sizing up once you don't know how to take a loss. Why do you want to size up? It doesn't matter. It doesn't make sense. So yeah, sizing up comes last. First, you want to build the foundation. You want to build consistency. Second, you want to build a positive EV system. Then you want to learn how to take losses, understand the market nature, understand how the market moves. Um, once you're profitable, you can start sizing up a little bit because you're profitable. So it makes sense to start sizing up a little bit and start experimenting with bigger kind of type of trades. But you don't want to go crazy with the like if you're trading, like if you're a beginner and you start with 1% and you want to start sizing up, you don't want to size up to 5% per trade. If that makes sense. If you're trading half a percent, you don't want to size up to 2-3%, right? You want to size up to 1%. You want to size up like not do 5%. That's like the amount of risk you want to increase. It's just incremental. But once you start sizing up and you start figure out loops in your system and you start like knowing how to take losses even better, understand the market even better, like gaining that experience, first-hand experience and like actually like live account experience, then you want to optimize your system to the T. Like you want to optimize as much as you can and start sizing up. And as you size up more, you want to optimize it more and more because you're spending more money. You're risking more money on each trade. You want these dollars to be, if I'm spending $100,000, I want them to be allocated perfectly to the T. That's idealistically. Of course, you're not gonna be perfect. You're not gonna have 100% win rate because that's not realistic. But yeah, you want to be sized up perfectly, basically. You want to be optimized perfectly because now you're sizing up. You're spending so much money on each trade, so you want every single dollar to be allocated perfectly, right? When you're spending $5 per trade, even if they're not allocated perfectly, it's just $5, right? It's like for an average worker, that's like 30 minutes of labor, and now you get it back. It's not a big deal. But if you're spending $50,000 per trade, you want those $50,000 per trade to be allocated perfectly, literally perfectly every single time, because that's what's gonna make you money. That's what's gonna make you rich. If you allocate 50K perfectly each time you're spending 50K, you're getting back 500K. 500. You're gonna be. It's just a matter of time for you to become rich, right? So I hope this was helpful. I hope you found value in this,